have the current stock market analysis for NIO Incorporated, stock ticker NIO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So as we're seeing here, the share price itself has taken a bit of a decline lower here, and I haven't changed anything on this chart here. What we were looking at previously was the price gap that has formed after share prices really exploded to the top side yesterday. What we're looking at here is the 4-hour price chart. So each candle on this price chart represents a 4-hour trading period. And as we can see here, for the most part, share prices have managed to fall right back into the original breakout point for this stock. So previously, what we were looking at was this $6.66 level. And as we can see here, this has now refilled this prior price gap. So this is what we were pointing to previously. I can make this arrow a bit bigger here. But what we were really looking at here was this price gap, and it was actually larger yesterday, if people remember. That we saw share prices kind of close here and then just rocket higher into the open of the Monday trading session. So for most of yesterday, this price gap was actually much larger. What has really happened here is that we have been filling this price gap to the downside. So it's important for a few different reasons. One is that we see all this upward price movement. But that's typically when you start to see, I mean, especially on YouTube with these clickbait YouTubers that don't know what they're doing, they start to say, the stock is exploding, buy now. And then people wind up getting into these positions at these upper levels, like while all the hype is happening. And that's that, so those positions are now underwater, losing money, which is not something that should be happening in an uptrend like this. I mean, what you're seeing is share prices moving higher. So anybody that's in a position here that might have bought in, right around 740 or somewhere around there, anything above $7, those positions are now losing money. So, this is one of the cardinal sins as far as trading is concerned. Do not lose money in an uptrend. The only way you can lose money in an uptrend is if you're buying at the wrong time. And that is typically what occurs on this platform. We see people that are they get excited at the wrong time, and then, you buy into the hype, and then that's what causes losses. So, what we were looking at yesterday here was the possibility that this price gap would be filled. And yesterday, this price gap was much more significant. There was a lot of empty space up here, but now it doesn't look that way because the price gap has really been filled. We have now completely moved to the downside, and share prices are now trading back below $6.50. So what this means is that this entire price gap has now been filled. So there's a bit of a development there. What typically happens with these types of events is that you see this rocketing movement to the top side, but then when there is a price gap, share prices have to start moving lower to fill all of those orders, and then what that starts to create is a lot of new negative momentum, and it can be very confusing because that prior movement was upward. I mean, it was positive. How can things turn around so quickly? Well, that's the reason why. The market has to refill all of these orders that were in place in this area. You can't really just skip over market prices. The market is a big place. There's many, many orders out there at essentially every price level. I mean, there's somebody that is willing to buy or sell a stock at pretty much every price level. So what that means is that all of those orders have to now be filled. And what that starts to create is new momentum to the downside. So anybody that's telling you to buy this stock, and it's not even just this stock, but to buy any stock under those types of circumstances is leading you astray, and they have absolutely no idea what they're doing. I guarantee you those people do not make money in the market. They lose money. So these are dangerous conditions to be trading in. If you're already long, it's fine. You can even maybe take profits at these upper levels. But it's not a good idea to be buying high and selling low. I mean, that seems pretty basic. So the way things currently stand here, we have seen this broader uptrend move, and currently what we're looking at is the rally now from 368, which is the bottom that we called for this stock, going all the way up to 770. So we have now already broken through the 23.6% Fibonacci retracement. We've also filled the price gap. So where do we go from here? Where is the downside likely to stop? Well, the first level that I would be watching here does come in at this 38.2% Fibonacci retracement. And the reason that I say this is because, we also have some resistance here from September 26th that started to develop there. So you do have two different signals that are sort of matching in the same area here. You've got this historical price high as well as this orange price zone here that resolves itself. And this would be right around, let me get somewhat an exact number here, right around $6.20. It's slightly below there. So this is sort of the next target now to the downside. If you're considering buying the stock, I wouldn't even think about it unless you see a test of this area first. And that doesn't necessarily mean you buy there either. But I think that that's probably what we're looking at here initially because there has been a lot of profit taking here. We are seeing orders filled to the downside, and now you've got this new short-term momentum that's starting to develop in the other direction. Let's just take a quick look at a shorter-term time frame here. Let's look at the 5-minute price chart. So these moves start to look much more substantial now to the downside when you see this, and this also actually gives us a better view of the price gap as well. So we can sort of see, how substantial this actually was. I mean, if we look at the 4-hour chart or the daily chart, all of this is going to look like it's filled in, and it really wasn't. I mean, there was a massive gap here. So, we can see the distance of that price gap, and we can see also that it has now been filled just in the last few minutes. This was filled completely. So essentially, this area extends, right to here. So this just now resolved itself, like just as I'm making this video. It was the prior 5-minute trading session. So this is just now occurring. So, as this currently stands here, we will just sort of move back here on these longer term timeframes just to sort of get a sense of where these downside price targets might be. And then I'll close out the video. Initially, I would be looking at 620 as a potential area of support. If we do see a break below there, you will start to run into exponential moving averages at that point. The main line in the sand for me to start turning bearish would be found right around here. So I'd be looking at roughly $5.20. So you do have a lot of movement here to the downside before I would personally start to have a more negative view of near-term price direction. And then inside here, I think that really what you could be looking at is more of a sideways kind of consolidation, which would make a lot more sense for the stock because we have seen such significant price moves here. You do need periods of time for the stock to consolidate and sort of form a new base at higher levels. So I would really probably not even consider buying the stock unless you see something closer to like 550 or something around there. So here's the current stock market update for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.